Hello everybody, it's Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to take a look at when to let your trades run. In other words, trying to let them run further as the trend gathers strength. But before that, we have to have a look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept that losses can and will and do unfold. Doesn't matter what trading approach you take, there always will be losing trades. So I want to have a look at a 3-minute chart of the NQ from this morning, and in particular I want to look at a couple of PB or pullback trade setups that we have on our charts here. You can see some trades result in losses. For example, there's a history triangle here. If I place the analysis on this particular setup, you can see this would have resulted in a loss, a 1R loss. So I wanted to start off the video just reminding you that losses can and will and do unfold. But I want to look in particular at these two PB or pullback trade setups and show the difference between them and why on the first one you should have taken profits at the target, and why the second one, why you should have let it run a bit further. So let's place the analysis on this PB setup. Oh, by the way, this is our add-ons for NinjaTrader 8. We also have scripts for TradingView as well. So let's hover over the blue buy bar, right mouse click and do Analyze. You can see this places the analysis on the setup. Here, using position sizing, i.e. risking 2% of a sample $20,000 account, this would have mean going long 2 contracts. You can see the market rallied up quite nicely and reached our first target here, where a profit of approximately 3.6R or 3.6 times the initial risk was available. Now let's have a look at the second one here. The second one was another good trade setup. In this case, it would have been going along 3 contracts. It went up to reach its first profit target there, where a very nice 7R profit was available. But you can see the market went on a bit further. It rallied past this one. So let's see whether there's any clues on whether we can see the difference on whether we actually take profits at the target or let it run, in this case with our ATR stop, which is our blue dots for going up, our red dots for going down. Again, remind you, there are losses. See, there's a history triangle there, so if we place the analysis on this setup, again this would have been a PB or a pullback trade setup, and this would have been a losing trade. So again, I stress that it's important to understand that losses can and will and do unfold. In this case, again, it would have been a -1R loss. But let's go back to this PB buy setup here. Let's go up to where the market reached its first target. Can you see that? It reached the first target here. If we come down to our MTP trend, can you see our grey band here? This is what we call our strength band. And the bar that it reached this target, if I come down, it was on this bar here. Can you see that the MTP trend was less than our line here? So in other words, our strength line. In other words, here we deem that the market is what we call weak, because our MTP trend histogram was less than our strength band. So that when this happens, we deem the market's weak, therefore we want to come out at our profit target. So that would have been a nice 3.6R. Again, see how that 3.6 was greater than the -1R loss from earlier. Now if we look at this next trade setup, here the market reached the target there, and can you see when we come down to our MTP strength band, can you see how this was exceeded? You see on that bar there, the MTP trend had gone through the strength band. In other words, it has exceeded the strength band. When this happens, we deem that the market's strong. When the market's strong, we want to then swap to using our ATR stop. In other words, we want to let the trade run a bit further. So rather than coming out here at a +7R profit, the market would have ran up, ran up, ran up. Let's grab this and drag it. Easy in our add-ons for NinjaTrader 8. And can you see that is where the market would have then come back down and crossed the ATR stop at this point here. Can you see here how it actually increased the profit to up to just over 14R or 14 times the initial risk? So doubling your +7R profit from earlier. So this is where it's good to be able to let your trades run. And as you can see, this was an absolutely marvellous trade set up here. 14 times the initial risk for a profit is an absolutely massive trade. It's also, as a PS, it's nice to see how our PB or pullback trade setup, this is our new trade setup in MTPredictor, we've added recently, how even though there was a small loss here, which we saw earlier in the video, how looking to buy here, then again there was another smaller one to buy up here, how this would have caught the minor pullbacks in this trend very, very nicely indeed. Each little pullback we had a buy set up to then go long. But the purpose of this video was just to let you know when to look to take profits at the target, which again I just run through this. When the market reaches your profit target, if the MTP trend is weak relative to its strength band, you look to come out at its target. But if the MTP trend is strong, in other words, when it reaches its target, it's beyond the strength band, then you look to run with the ATR stop. And as you can see, that would have held you in long all the way up to here, where you've been stopped out for approximately 14 times the initial risk. An absolutely amazing trade there on the 3-minute NQ from this morning. Thank you very much, and hopefully that's helped to show a bit more detail on when to let your trade run using the MTPredictor RT add-ons for NinjaTrader 8.